Hey guys, welcome to another Trade Genius podcast. Bob and Phil here, as always. Guys, the stock market has been on fire, ripping higher, but it's not passing the lie detector test. We're going to tell you what that is in this video. Let's dive in.
Trade Genius.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
All right, Bob. So finally a little bit of a pullback today in the market. And just to give you some perspective, the daily 9 EMA has not been touched in over 30 days. I think 32 days now. Finally got touched today. And we haven't even seen that in the most bullish of environments where you have the Fed pumping with QE and 0% interest rates. So now we have like 5% interest rates, and the Fed's doing the opposite of QE. They're doing QT. So I think everybody wants to know what's really fueling the boom here. And then B, is it something sustainable going into 2024?
Yeah, I mean, just like, when you have a sick patient and you want to give them some relief, you pump them with steroids and they actually feel invincible for a couple days, and then they take a hard crash, and I think the market's kind of doing that with Janet Yellen. But to answer your question, and for people listening, there's two things and two things only driving the stock market gains right now. It's Janet Yellen pushing in hot money that basically acts as collateral for them to speculate with. And number two is these things called structured products that are being sold by the banks that cause basically a bump in yield over and above the T-bill rate that is not volatile. And money has been pouring into that left and right. And that Ponzi goes until those flows into those products stop. And, a lot of times it's going to happen probably with a rate cut, because then the yields start to fall again. And so I think those are the things that are driving it, Phil. And the first chart here is, look at the T-bill, and now we're starting here revisionist history. So, well, if the RRP goes down to zero, it's not going to affect anything. Well, let's let it get down to zero and see. Let's have that conversation, because Wall Street has been very, very good at just getting freebies all along. These guys are like VIP members at a casino, and all they're doing is hunting free drinks and free steaks, right, as they're going from game to game here. And so this is a slush fund that's going to have to go away, because Janet, she has to raise a lot of money here, and because she kept everything short, Phil, it's just she's going to be on a hamster wheel that's going to be like spinning a million miles an hour, and things are bad going to happen with that environment. And the other thing that people talk about, the other thing that was a pump here, which is amazing, we'll throw this next chart up here, is that, people saying, well, the Fed's pausing, so everybody all of a sudden started calculating, well, they dropped it 4 rate cuts, right? Okay, but that's not what happens to stock markets when we actually cut rates. So this is like you're going on a blind date and you have all these great ideas of who you're going to meet, and then when you get on the date, you're starting to see a dump in the stock market, and that's what's happening with these rate cuts. And here's the other thing too, Phil, it's pretty wild, is that the 1-year yield, you would think it would be reacting to this great news from the stock market. It's not going down. That would be the trade of the century. Just put everything you can into the 1 year, which is yielding over 5%. You get 5%, and if they dump it, you're going to get a bump in principal too. But nobody's buying that. The stock market's not buying, the bond market's not buying what the stock market is selling here. I thought it was really interesting. Yeah, so there's another thing I want to show here. I won't show it in, but we talked before that actually the consumer is feeling this. Wall Street's not feeling the pain, but the consumers are, Phil. And so people are now actually spending almost, I think, 5% of their income now on interest payments, which is just absolutely insane. And that's across the board. That's including all the people that don't have interest payments.
Right.
So can you just imagine, what a toll that takes on your family's finances? So, we're at a point now where, we're as good as it gets. The flows stop in January. We talked about this a million times, okay? And we know now the good news of these rate cuts have been exposed now too. And the RRP only really has another month or two left in it before it's drained.
Right.
So Phil, I think we're at a point now where I think we're going to get that window weakness that we talked about. I made that trade I said I was going to make. I bought December 15 puts. They paid right off the gate this morning. And then I bought the December 29, 458 calls. And I just going to be putting spreads on and off as I need to work work those prices down. But I think we'll break one of those two ranges or both those ranges during the month of December. I think it's going to be more volatile than people think.
Yeah, I think you summed it up pretty well there. And again, like when the yield curve has resumed its steepening, and I think once that hits par, goes back to zero and starts venturing back into positive yield curve territory, I think for me, that's when I'm going to say we're in recession. We're not there yet. We had a really good steepening run. Then Janet Yellen came in with her refunding announcement that basically was less aggressive on debt issuance than people were anticipating. That knocked that what you were talking about, knocked the about 3 or 4 rate cuts backwards for the Fed, loosened financial conditions, which the Fed was really relying on. And so now the Fed has a hard decision to make. Do they raise in a couple of weeks here when they meet for the December meeting? And if they do, I think you're going to see a sharper pullback, and that's going to take us down into March. Now, I wanted to put some things into perspective here in terms of this market. So we're in a QT environment, not QE. So we're not looking for just, months and months and months and months on end of rallying, because the market tends to gyrate up and down when you're in a QT environment, because you just don't have that endless spigot running from the Fed fund coming into the market from buying treasuries. So this chart here basically shows you every time we popped over the 50-day moving average on the SPX. So this is a 50-day simple moving average, which is that yellow line. And you'll notice when we come from underneath it, like we did recently, and you get that pop over it, inevitably you're going to get a pullback to it. So it's happened a number of times, and the setup is you're dumping under it, and then you have an aggressive breakout over it. And every time we've done that, we get a pullback to it. So, and again, in terms of this move, it's been extremely stingy as far as giving any kind of pullback. Even in this move here, after we had that pullback to the 50, so we haven't even had that yet. If we get that, then you can talk about potentially another big run up if we have enough time before the middle of January, like you said, before the flows change. But at the very least, we're looking for some kind of pullback towards 43.60ish or so. This is climbing, so maybe it turns out to be 43.80. This is SPX, by the way. So the futures will be a little higher. We also have a contract roll this week on futures, and that's been jumping the future contract premium up about 40 to 50 points actually. So we'll have to see what that is come Thursday so if you guys are trading that, you see that on your chart for ES in TradingView, non-back adjusted charts will have this huge gap, and you're going to think they're just buying the market overnight. That's not what it is. It's just a contract roll. If you look at the December contract, it doesn't move, but they roll to March contract. So just be aware of that on Thursday. Anyway, so yeah, we'd be looking for on the SPX, we'd be looking for that pullback to maybe 43.80. Maybe it's 4,400 by the time this rolls up and this pulls back. So in other words, we're going to get, and typically when we're in this situation here where there hasn't been any kind of pullback and we're getting all of those, like the trade force is saying sell, if the longer term heat settings are saying sell up here on the daily, which is rare. You don't get a lot of those daily signals. Then it kind of gives you a perfect storm for about 150 point pullback. And then I think that's going to play out exactly like how it's been. If this was a QE environment, I'd say, forget it. You're gone. This thing's just going to keep going because the flows are way too positive for any kind of pullback. But that's not the environment we're in. We're in a highly leveraged environment. A lot of this was short squeezing. And so now you need a lot of flows that have already been spent for the month end and the beginning of the month flows. That's why we had that big run up. Everybody thought, the new bull market was here. But you have to understand those beginning of the month flows, especially when it comes from a positive year-to-date performance, get really strong at the end of the year. And so that's what we saw. But those flows have been spent. So now there's going to be some, it's like when you run a sprint, you got to have to catch your breath. That's what we're going to see now over the next week or two, I believe, Bob.
Yeah, and this 45.55 area on the current contract has been an interesting
Huge
pivot. So we came down to it, and you and I are doing a podcast as the market's closing, so I'm not sure exactly where it is at the moment. But I think if we get back underneath that, then we'll test down. I did some fibs on looking at a pullback from the November lows to the the December high here, and there's some room to go down and keep the bull momentum going here. There's 150 points that I think we could take off pretty easily. So that's kind of how I see it, and I think we're in an environment now where I think we're trading. Middle of the day is just totally boredom. If you're a trader, just enjoy the day and just come back around 2 p.m. to finish the day off until we get a little closer to this Fed meeting. And then, Phil, you were saying in the room that there was rumors that emergency rate meeting and stuff like that because the gold was going zonkers, and then they beat gold back, and then oil was going zonkers, they beat oil back. And, when I woke up this morning, when I went to bed last night, it was inflation uber alles. I woke up this morning, I'm like, are we having a depression? Because everything just got collapsed.
Yeah, it was a very strange move overnight. But if you notice here on the chart, bears have a chance here for holding this under, you asked where it was closing, 45.60 and about 45.70 on SPX. This red line is a high volume node, and you notice it acted as major resistance. On top of that, something to note too, when we're full bull, you're not going to hold a gap open, a gap down, and we got a gap down today, and they held it. We couldn't even get back to the mid gap, which typically is something you would expect. So there definitely was a lack of buying pressure today, and bulls or the bears have a chance here. If they can hold that and start rolling this back over, then I think we'll start hitting down toward these lower levels. 4,500 on SPX, just so everyone knows, is a massive magnet in terms of gamma, and that has to do with options and the derivatives, which really drives this entire market right now. And so that's probably our likely downside destination. So you're looking at about a 70-point pullback from here. So that's what I think, Bob, over the next week or so. That would be my weekly downside target. Upside target would obviously be closing this gap and then potentially pushing up higher toward, we have a big trend line over the top of us at around 46.08 or so on SPX, something like that, immediate upside target. So that to start the week off, those are the levels I'm looking at.
Hey guys, thanks for listening. Hit like it, subscribe, hit the notification button, and check us out. There's trades pretty much every day, and we have the algorithms and the indicators to help you be on the right side of them. So go to tradegenius.co or tradelikeagenius.com. Tell your friends and enjoy your day, and we'll be back at you tomorrow. Thanks, Phil.
See you guys later.
Trade Genius.